Oh boy, we need to talk Nvidia. This is the big catalyst of this upcoming week when Nvidia reports earnings on Wednesday. And we do unfortunately have some troubling signs that this quarter may not be as good as other quarters that we have seen. And no, I'll acknowledge right from the start, I don't think Nvidia is going to miss earnings. I don't think it's going to be a disaster in the quarter they just had that we're going to get numbers on. But the guidance might not be as rosy hot as some people are expecting. Now, you should also know that the options market is expecting about an 11% move. That would be $200+ billion of market cap value that could be added or lost from Nvidia. Now, Nvidia tends to actually sell off after earnings. This is not uncommon. This time around, it's a little uncommon to have seen Nvidia run so much into their earnings. Here in this video, I'll go over the most important things you need to know before Nvidia reports earnings, what the estimates are, what Nvidia stock is likely to do. So, let's get started. The work is cut out for us. Let me know down below in the comment section, what is your opinion on Nvidia's earnings? Is Nvidia stock going to fall or rise? And to what degree? Because the options market has been pretty spot on this earnings season, and it's pricing in 11%. So that's huge. The first thing you have to know is Nvidia tends to rally into earnings and then sell off after earnings. Back here, you had the gap up. This was the gap up that, I mean, if you hit the calls on this earnings, it was insane because Nvidia usually prices in like 6 to 7%. The stock moved 24%. Yeah, that was a big winner back here in May of 2023 when Nvidia really shocked the world and created this AI tidal wave or FOMO or bubble, whatever you want to call it. But what actually happened following Nvidia's earnings? The stock actually sold off. The stock sold off about 11% over the course of about the next week or so of trading. And then what happened? Nvidia kind of rallied, right? They sold off a little bit before their last earnings, and then they rallied. This was their earnings back in August of 2023. They rallied about 16.5% heading into earnings. But what happened? Nvidia came out with another rock solid monster quarter, huge guidance. If you remember, Nvidia was up about 10% this day of earnings, and then they ended up selling off big time. By the end of the day, they only closed up 0.1%, about 47 cents. So really nothing happened that earnings. And then Nvidia sold off about 2.5% the day after. But what happened? Over the course of the next month or so, Nvidia stock actually sold off almost 17%. If you look out about 2 months, Nvidia sold off about 23% from that high of earnings, about 502, down to the low you've seen back here at about 392. So Nvidia sold off after that earnings. What about last earnings? Well, last earnings, Nvidia, again, it's been the same story. Beating numbers huge, raising guidance huge. Nvidia actually just sold off 2.5% the next day. It just, markets had expected too much, and they were correct, but it was just too much for the stock. What happened? The stock ended up selling off about 11% over the course of the next 2 weeks or so post earnings. Now, this time's a little different because you've rallied so aggressively. Nvidia on the RSI has been overbought since January 9th of 2022. About 6 weeks, 5 or 6 weeks. You have been overbought on the RSI. Nvidia currently has an RSI rating of 77.33. I mean, if last earnings told us anything, and that was just as the stock went from 392 to 504 or so, and the stock still sold off 2.5%. This time could be Yeah, much worse than that. Nvidia has rallied 54% heading into earnings. So, based on kind of what we've seen over the past 3 earnings, Nvidia's going to sell off. The question really is how big and how bad could it be? Those are the 2 questions. Could this be the bad quarter, or is this going to be a good quarter? And what could the sell-off look like? Well, I'll tell you right now. We did get a little bit of troubling news. At least I think it's troubling news. The markets didn't really see it the same way, though. Some people have raised the alarm, but lead times, as per UBS, these are like, let's say today you wanted to order a H100 GPU from Nvidia, $35,000. It would have taken you 8 to 11 months, November, December, right? Of just a couple of months ago. Now lead times are only 3 to 4 months. So if you order GPUs today, you could get them by May, if not June. That's way different. That is a big drop in a short amount of time. Now, a couple things could be going on here. It's clear. I mean, Nvidia in the year ago quarter brought in about $7 billion in revenue. Now they're looking at estimates about 20.4 billion. They've pulled forward, no doubt, a lot of demand for GPUs. It's kind of like when you get a phone. You get a phone, you use the phone you have. You don't go out most of the time. Anyone I know, they don't go out and buy the latest new phone every year. At least maybe you guys do, but most people don't. So when they buy hundreds of millions of dollars worth of these GPUs, they tend to keep them for a while. They don't tend to go out and need to continue to buy more. We've also heard anecdotally CapEx spending is not as high as what some people on Wall Street thought it was going to be, which also suggests maybe less capital investment, which could mean less GPU investment. I doubt that's really what is going on. But the simple fact of the matter is, a lot of companies probably bought a sufficient amount of GPUs for now. The other problem is, based on this long lead time, 8 to 11 months, GPU prices were able to be $35,000. Do you know what it cost Nvidia to make an H100 GPU? About $3,000. Do you know what the MSRP is, the manufactured retail selling price? About $8,000. That's where the pricing roughly should be. It's been multiples higher than that, $35,000 to buy these GPUs. Because if not, you had to wait 8 to 11 months and still pay $35,000. So you're just going to pay $35,000 now and get it as soon as possible. Well, if the lead times are falling, that likely means pricing can come down as well. Now, I'm sure Nvidia is going to post, good guidance, but you need to see some big guidance to really get the stock moving higher following earnings. UBS, in this note they put out, they said they expect guidance between 25 and 26 billion. UBS thinks the lead times have fallen from 8 to 11 months to 3 to 4 months because supply has gotten better, because Nvidia has more supply, not that maybe the demand is not coming in as hot as it was before. And that could be true, but even if Nvidia has more supply, likely prices will fall. The lead time here is the biggest thing I think that will dictate pricing, because time is money. You've all heard this before. If you have to wait 11 months potentially to get your hands on GPUs, well, if you can get them sooner, they're going to be cheaper, right? If you got to wait a long time, they're probably going to be more expensive. Supply and demand. So I think that puts a little bit of pressure on the guidance. And let's be honest, even with red hot guidance for next quarter, for the rest of this year, it's still probably not enough. So the question really is, does the guidance come in weak? I mean, if UBS is expecting 25 to 26 billion for next quarter's guidance, like 23 billion would be really, really weak. And that's still really good. but that would still be really weak. Now, at this point as well, you got to remember, you went from 7 billion in revenue to 20 billion in revenue. Nvidia stock is priced for huge growth. It's trading at like 94 times PEs. So the law of large numbers is going to start working against Nvidia a lot, as is, if the pricing stays the same. Because, I mean, growing from 7 billion to 20 billion is like hundreds of percents growth, 300+% growth year over year. Growing from 20 billion to 23 billion, sequentially is less than 15% growth. That's rough. I don't think you can justify Nvidia's valuation today if that's what we're looking at. You really need to see like a $30 billion guidance to make the valuation make sense. If you're incorporating PEG ratios, PE, price, earnings, and growth, PEG. So that puts it in a really, really tough position. You also got to remember that Nvidia has seen a lot of option activity as well. Nvidia is consistently one of the most traded options chains in all of the markets. And this time, options traders are bracing for a monster share move. You're implying 11% in either direction following the results on February 21st. Now, the average move is about 6.7%, so about double the average move. Now, it says with Nvidia's market capitalization at 1.8 trillion, a move of that size would make for a potential swing in market value of about $200 billion. That could be a new record for total market cap gained or lost in a single day. Facebook actually took that record back when they dropped the first time, like 30%, when they reported, bad guidance, bad earnings, and everyone was fearful about Meta. That's when Meta ended up falling to $88 per share. Hindsight's 2020, right? But nobody wanted to buy Facebook during that time. If Nvidia moves more than 11%, which is possible, you're going to see Nvidia break the record for the largest market cap swing in a single day. Now, the problem here is a lot of people are bullish. On Thursday of last week, more than 750,000 Nvidia options had changed hands by just 1 p.m., making it the second most actively traded single stock name in the options market. Despite the sizable run-up in the stock, demand for upside options bets on Nvidia remains intact. With one measure of sentiment, the stock's 90-day 25 delta call skew near a 5-year high, according to Susquehanna analysts. Quote, the elevated call skew tells us that investors still see the potential for significant upside despite the move already made, and that there is significant demand for upside exposure as some who may be fearful of the high volatility turn to upside calls for lower risk exposure. So say you can buy a at the money call for, $15,000 or some kind of number, right? Well, that's potentially a lot cheaper than going out and buying 100 shares of Nvidia. As you probably know, one option gives you leverage of 100 shares. So if you're going out and trying to buy 100 shares of Nvidia today, that's going to cost you $73,000. But if you are bullish on Nvidia and you just want to buy a call option at the money and it costs you maybe $15,000, well, and I'm just ballparking here, it's probably around that range, $10,000 to $15,000. You're going to pay a fraction of the price and still get the same leverage. The problem is most of this 50+% move you have seen in 2024 year to date with Nvidia has been based on option activity. Now, maybe some of you guys don't know this, but market makers, they're the ones that take the back end of most of the options because that's their job, is to create, markets. There's not enough hedge funds, institutions, or retail investors to take the back ends of all of these calls that are being bought because it just on a nominal basis costs way too much money. So what's happened, right? Market makers, let's say you have a right to get shares at $700. You bought a $700 call, that thing is in the money. What do market makers do? Well, they have to sell you stock at $700. So what will they do? They'll go out and they'll buy stock at, let's say, $699. So then when they sell it to you at $700, they keep a little bit. That's how market makers work. That's how they make their money. That's just the way it is. That's why if you see a lot of call options bought in a stock, you can see a gamma squeeze. It's market makers going out and buying stock based on these leverage bets. And again, when you're paying a fraction of the price to get leverage of 100 shares, essentially, instead of buying 100 shares outright like we just looked at, you can see a lot of shares the market makers need to buy. Well, the market makers, they need to unwind that at some point. They're not just going to keep holding all these Nvidia shares, waiting for you to roll over, waiting for you to, assign the market makers and get your stock, right? So that is working against you as well. The market makers need to unwind these positions, especially as Nvidia's value has went up so much. So that's almost, I don't like to say anything's a guarantee because nothing's a guarantee when you're investing, but almost guaranteed that Nvidia sells off just based on that reason alone. And I actually heard them talk about that on CNBC, that just the market makers, they need to see the options unwind here, and it does make a lot of sense. Now, Nvidia is expected to post earnings of $4.56 a share and a rise in quarterly revenue to $20.378 billion. Call it $2.4 billion versus $6.05 billion a year ago, according to the median estimate from 33 analysts. So yeah, I mean, you got to come in a lot higher than that. This analyst, which is one of the top-rated analysts, Christopher Rowland, he thinks Nvidia is going to do great, but he thinks the guidance could come in a little bit lower, and maybe the beat's not going to be as good. He says Nvidia needs to see a beat of at least 1.5 billion ahead of expectations in order to justify the stock's high price. So simply just beating the estimates or meeting them is not enough. Now, he's overall very bullish, but I think that's another problem. When everyone is this bullish, it's not the most opportune time to get into Nvidia. Now, if Nvidia does sell off a lot, I will definitely be buying the stock. But I mean, it's going to have to fall quite a bit. I mean, it's up 50% in the course of, 2 months, a month and a half. That's just kind of insane. Now, let's take a look at some of the numbers over here for Nvidia stock over on Ortex. You can see option positioning. On Friday, very bullish again. You had 850 orders from hedge funds and institutions, totaling $339.72 million with a positive order value of 81%. So a majority of options going into Nvidia are bullish, are calls, or selling puts. Over the past week, you had 6,321 orders, totaling $5.46 billion with a positive order value of 89%. So when you're almost 90% bullish on a stock, that's crazy. Looking at next week, February 23rd's expiration, next Friday, you do have calls open interest of 57.55% and put open interest of 42.45%. On Friday of last week, you had about 64% volume to the call side and 36% volume to the put side. So definitely just overall here, very bullish numbers. And that makes me think that maybe you do see some large downside. Maybe you see more downside than what you normally see with Nvidia. Now, where would I think Nvidia could go? Maybe $600 per share. That's a good kind of level to base out at. If not, you could fall back to about $550. It just depends. We've seen SMCI collapse. I think Nvidia and SMCI, a little bit different, right? But are they though? Are they? Are they that different? Of course. The products they sell are different. Nvidia makes the GPUs. SMCI makes the GPU physical racks. But, I mean, when the air starts to leave the bubble, it can go pretty quickly. And the whole bubble pops. So, we'll see. Let me know what you think down below in the comment section. I want to be clear. I am bullish on Nvidia. I think it's a great company. I would love to own more Nvidia. But you're not set up in an optimal position heading into earnings. You're just not. And honestly, I don't think there's anything Nvidia could say or, give us number-wise that will keep this stock from falling. I think it's going to fall. Now, this relationship with Nvidia has been clear with some of your small cap names, your IWM. When Nvidia is red, IWM is having very green days. Take a look at Thursday. Nvidia was down 1.68%. What happened with the IWM on Thursday? IWM was up 2.67%. What happened the last red day for Nvidia? Back here on February 8th. What happened on February 8th for the Russell? Well, on Feb 8, the Russell went up 1.52%. What happened the next red day after that? February 6th. What happened? The Russell was up about 1%. So it's clear there's this relationship here. If Nvidia sells off, the Russell's probably going to do better because it can disperse more capital back into other areas of our markets. And the Russell looks pretty good. So if you did want to trade Nvidia to the downside, potentially going long on IWM, small caps, could make sense just as an inverse trade to Nvidia, or buying puts on Nvidia could also make sense as well. Nonetheless, let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a great rest of your day, and I will see you in the next one.